All right, hello everybody. Welcome back to the channel. I am here today on episode number 240 on Palantir Weekly. I know it has been about 4 weeks since we've done a weekly, but I am here with one of the OGs of this Palantir community, Mr. Arnie, who's been living his nice little life traveling all around the world, but he made some time for us today. Arnie, how you doing?
Hey, bro. I'm doing well. Life is changing a little bit, but I'm always here. And you have this feeling, oh, so long we have not been talking together. It's a sort of Call of Duty.
Yeah. No, it's definitely been a minute, and it's time to reconnect. But so Amir, I don't know where the heck Amir is. I kind of think
I
he
mean,
fell. I I
and
hope he
he's the
shows
one
up.
that pretended, tell me the topics.
Yeah, he was like, make sure you text me the topics beforehand, and now I think he's sleeping. So
Like a
hopefully
diva.
he might be a little bit of a diva here. Matt Money said he was going to be late, so Matt should be here hopefully in like 10 minutes. Amir's going to be mad though if he slept through this because Amir really wanted to do the show today, and he genuinely like Amir never is late. So if he's late, I think he might be sleeping. So unfortunately, he might not be here. But regardless, I'm here with Arnie. Arnie, we got a lot of topics. Let's get right into it. First of all, thank you everybody for being here. Again, I'm sorry we've been missing Palantir Weekly for the past couple weeks. I think we might have to find a new date. Arnie's been traveling. I've been super busy with life. I mean, I think maybe Friday nights at 11 p.m. might not work in the future. So I will keep everyone updated on how we figure it out. But just, as life moves on, people might have to adjust the timing. So we'll try to get something that works better in the future so we can be consistent. Arnie, we both started buying Palantir. Well, I started buying Palantir a lot higher than 6-7, but we both started really buying Palantir at 6 and 7. The stock is 160, is a top 20 company on the planet. What is your reaction to hitting all-time highs on Palantir?
Unexpected, but up to a certain point. I believe we are really in that phase where you have the golden coincidence where a great story is converging great fundamentals, and the reality is the wind is actually so strong. And I've been sailing literally last week, and once you
I
have
just
a
want people
strong
to
wind,
hear. I want people to hear what he said. He's been sailing. This guy's on a freaking boat out in the oceans of Europe sailing. That's what he's doing. That's what you can do, folks. If you invest in Palantir at $6, that's what you can do with your life. So
so when the wind is strong and your sail is positioned correctly, you have so much push that you would be surprised how strong a boat can go without any push from the motor. And it blends so much, like at 45 degrees, that you're also surprised at how the hell the boat can sustain itself staying like that. So, this to say that we are now in one of those unique moments where you have a perfect alignment of great company, great narrative, great business, and all the forces are aligning. Even the political alignment, I think the last days speak very clearly about what's happening. So, what to do in this situation? Yes, of course, you can navigate through the Excel, try to question yourself. Oh, what will be VPE? What will be the next quarter growth? Okay, you can have a lot of fun with the financial models, but the reality is, what matters most is always being fully aware of the context, because the context does influence the numbers. And even a beautiful news like we got early today, Palantir joins officially the list of the most 20 US companies is something that resonates. So what happens? Palantir doesn't only have a great product, now it has also a great brand. So if you give wind to this combo with a lot of visibility, guess what? You have even more sales. Because Palantir is not just a random company that tries to emerge in this ocean of startups. Palantir is the thing that people want. And well, there is a big topic related to that. But to put simply, if clients are aware of Palantir and clients want Palantir, the sales becomes way easier.
Yeah.
Palantir has the power to negotiate.
You have leverage. You have leverage at that point when you have
So
more
let's say
inbound demand as well.
good things happen.
So let's go deeper into the stock price itself and not really just valuation, but the price, because I think a lot of people that are watching this today are privileged enough to be sitting on just unbelievable amounts of gains, incredible gains that have changed their life, gains that, seriously, people can start thinking about retirement or maybe just selling covered calls for a living. I mean, there's a lot of different things that have happened in this community with $370 billion of wealth created in Palantir. How are you thinking of the price? Are you thinking it's overvalued? Are you thinking it's expensive? Are you thinking it's running up too much because of hype and momentum? And when they have an earnings that's good, but maybe not phenomenal, it's going to tank. Are you worried that it goes back to 70? Do you think it even has a chance to go back to 70? Do you think all of the analysts, and we'll talk more about Piper Sandler today, that I think kind of caused the 4% move, that are now starting to get uber bullish on the name, is too toppy? Is it like, how are you thinking of this price? And do you also think that Palantir could be one of the only companies in history to actually maintain 110 times price of sales, a 700 PE, simply because it is in such a unique position, such a unicorn position, to be able to grow into this valuation and then expand farther than what any of us, even the OG Bulls, could have ever imagined?
Okay, what's happening is something that is unique of its kind. I've been receiving a lot of comments like, "Oh yeah, now these Palantir bulls pretend that this time is different," and I would argue, yes, this time is very different because the company that you are dealing with is not just another company. It's a company that is literally discovering the secrets of black magic. Because as I always insist a lot, and I think people will start getting annoyed by that, is if you can find the recipe of expanding margins while you're also accelerating, it means you're unlocking the recipe of infinite money,
Yeah.
because that sentence intrinsically means infinite ROIC, infinite return on investment. You put less resources and you grow more. I also want that. Imagine you invest less money and you get your portfolio increases. So that thing is extremely valuable and unique on its kind, but is unique on its kind because we are not talking any longer to a company that is small, so maybe it has some tailwinds. Now, this company is getting a lot of tailwinds, but being able to scale this much at this scale and accelerating with this scale means that the business is structurally very, very strong. So yes, this time is different, but the company is truly different. I would like saying, oh yes, the stock is cheap, because it is not. It is not cheap from any fundamental reason. More than 100 sales multiples, 200 on the EBITDA, free cash flow, and so on. So those are numbers that typically you say you are out of mind of paying. But again, if you stop there, as most people, especially in the value investing community, do, if you stop there, you just see, oh, this company is overvalued. Let's make a post saying this is ridiculous.
Right.
But if you understand the dynamic, you may realize, wait a second, what if the numbers I'm seeing are just early and the strength of the wind, the waves, is actually so much that we're not talking about, oh, a nice wave you can surf. This is actually a tsunami. Because that's the feeling I'm having. You have the push of the AI narrative. You have the push of the Palantir intrinsic story, and you have the political push.
Yeah.
So all these things combined change the narrative, but change the numbers. So my personal feeling is expensive. I think I've been saying it's very expensive for a bit,
We've all been saying
but
it since $50 that it's expensive.
we see the stories getting better and better and better and better and better, which means we are in that cluster where it was expensive, yes, but it wasn't overvalued. Actually, it is getting priced for a good reason. So what I personally think it will happen, and then here I put a speculative hat on it because I can't know, is until we reach some very, very wild excess, it's very hard to take the stock down. Because now people want it. Like I sometimes receive comments like, oh, Palantir will start trading at a 30x free cash flow. And I was like, how can it trade at 30x free cash flow if it grows 40% with a 40% free cash flow margin? That would be a steal. Like, let's put it this way. Right now it trades at around 200 free cash flow. But how it would be if it traded at 50x free cash flow? It would be like free money.
Right.
At 100x free cash flow, I would argue, oh, it started to get pricey because 100x free cash flow is a lot on conventional standards. Yet you have a company that is increasing the free cash flow much more than 50% if you are expanding the margins. So probably 200 is very high, is not absurd. And it's not very absurd if rather than getting a future where the scale brings the numbers down. But if Palantir is able to unlock network effects, so doing like what Facebook did, once they started getting traction, it started accelerating a lot, then these numbers are actually cheap.
Yeah, the sky's the
Costco,
limit. Because even Peter Thiel did not think Facebook could get to 3 billion users. But once they did, you can't say that's a $100 billion company. That becomes a $2 trillion company.
think this way, like even Peter Thiel, the best investor in the world, underestimated deeply how much Facebook Meta could have grown at scale. Like even if he's aware of network effects and he made a killing thanks to that, he sold Meta relatively early because he was, oh, come on, he's already a multi-billion dollar company. Now it will slow down, and actually it kept accelerating. I don't want to sound too optimistic because I think people need to be cautious, especially if they're just entering the stock. I think we are in the privileged situation where, let's say we are wrong and then the stock dips a bit and so on, we would still have very good profits.
Yeah.
So we are not in that position where we are really vulnerable to shocks. Actually, we could be even happy. But if you're new to the stock, I think it's important to be aware that there are also potential risks apart from the nice memes and the strong fundamentals, the nice story, and the two cool guys meeting at Friday night.
It's one of the most beautiful things about this story is that retail was early, and being early means you have a margin of safety. If you buy a stock at 6 and it goes to 160, and let's say your average ends up being 20, I mean, it has to fall aggressively for you to even really worry. Like, yes, your portfolio will go down if Palantir goes from 160 to 140, but realistically, you're not losing money unless you started buying it at 160. And I think that level of margin of safety, which is like legit, because in the options market, I track which stocks are traded every day the most in terms of volume. Palantir's up there in the top 5 or at least top 10 every day. Today was number 3 with 1 million contracts. So this is not just becoming something that retail is buying up. It's not just becoming something that institutions are buying up. It's something that traders are actively using. Even if they don't care about Palantir, the company, they're using it as a vehicle to trade. And that means liquidity. And when you have a lot of liquidity, you get a 10% dip. We saw Tesla yesterday. Tesla got a 10% dip to 300. People stepped in, even though a conventional investor would say their earnings suck. $300. How are you paying $1 trillion for this? Because there's people that now have affiliated their strategies with the stock. And I think little Palantir ended up finding a way to become one of the highest liquid stocks in the market. And that in and of itself, forget anything fundamental or technical, that in and of itself is something that could protect it from necessarily going back to $100.
And imagine this dynamic buy the dip is what is specific to Palantir, but I think it is also extended to the broader market, as you like to say. And because now you have retail people that are seeing their friends, oh, they're making a killing with the stock market. Let me jump as well. And then you have institutional investors that are truly frustrated. Like when Tom Lee says this is the most hated bull market in history, I see that. Imagine all these institutional investors sold aggressively because, oh, tariffs.
Right.
So that is truly what happens when you can't really distinguish the tree from the forest. And the forest is, we are in a place where the money is moving. So what I'm learning is the US capital market, so the world capital market, need money to flow. And with the AI narrative, this money is flowing a lot. And when the money flows, then people start invest aggressively. When people start investing aggressively, there is a positive view of the future. People invest, so therefore other people grow, and you have this motion. And what typically happens is this motion goes until some excess, some wild excesses are reached. Personally, I think we are seeing signs of very strong interest. In some cases, probably hype, but we're not seeing a broad excess in the broader market. So we are seeing a lot of interest. The market is clearly greedy right now, but there are a lot of latecomers. And at the same time, the market structure is not really pushing garbage that shouldn't be there.
Yeah, and to your point, Open Door is like pumping like a meme stock, but then Google is trading at 18 times earnings. So the froth in the market that is definitely there is not impeding itself into the names that actually matter, right?
Look, I don't like if I really have to speculate. Okay, when it will be the moment where we can say, "Oh, now is enough." My speculation. I've been saying this already since last year, and I think I'm even more convinced now. When we will start seeing the very big IPOs dropping, that will be a sign of, okay, now the market has given all what it could give. And the reason is simple. Let's say, what are the companies that in order to become listed in the stock market, they need Palantir as a reference? My first thoughts are Unreal and Databricks. Those are the big cows that bankers want to IPO. And those are the two companies that, like it or not, need to be referenced as Palantir. So when Palantir will become insanely priced, then it will be absolutely irrational for the companies just to drop the IPOs. And we're not there yet. Plus, we're not seeing anything close to the degenerate market that we have seen in 2020-21, where you could see even Rivian, which is a nice company, they became IPO at $100 billion valuation with no revenues. So personally, I think the moment we will see something like that, but in the AI market, when we will start seeing PowerPoints valued at $50, $100 billion doing the IPO, that would be the signal, okay, now maybe it's a bit too much.
Right. We might not be seeing it at that high of a level. Folks, we got Matt Money with us. Matt, we are going to get your thoughts on everything Palantir right after this video. This is Piper Sandler, $170 price target, street high target. Here's what they have to say on Palantir.
Gives you the confidence that it can grow into this valuation a la NVIDIA?
Yeah, I mean, I think what we've learned, let's say over the last couple months that we've been doing more due diligence on the company is this is more than a meme. This is a real business. When you go to SAP Sapphire event, see meetings around SAP and Databricks and the role that Palantir has there, and standing room only sessions. When you go to Databricks AI Summit, you see standing room only sessions of large enterprises. That's not even their main market, right? Their target market is government. And so a lot of our due diligence and bullishness is really looking at a longer term picture. How big can this company be? What's the art of the possible? And if you think of the art of the possible here, $2 trillion TAMs that they're going after, government, there's a massive secular shift from big machines, proprietary software, to small machines, drones, AI. We are in the early innings. We have this $2 billion government business.
Okay.
We think they could 5x to 10 billion on the enterprise side. That's $1 billion business. We think that could 5x as well. So very early days.
What are the signals
what we're
then?
underwriting is a longer term opportunity.
What are the signals then in product and strategy within Palantir that they are both consolidating the lead that they've got thus far in this enterprise AI lane where they are, and expanding? Does it have to do with developer tools? Does it have to do with platforms, unique environments that they're going to build? That's part of the enterprise software playbook, but I don't know if they're going to follow that traditional playbook.
There's nothing traditional about this business model, management team, or approach. So unconventional is the right label here. And I think 5 years ago, when we looked at this business, we put it in that data tooling kind of space. As we've done a lot more due diligence, talked to customers, talked to partners, those former competitors are now partners, both on the defense side, where they compete against prime contractors. They're now partnering with the primes. With data companies like Databricks, they're not partnering with Databricks, right? So I do feel like the signals are competitors turning into partners, number one. Number two, if you look at just web traffic trends, if you look at like the acceleration you're seeing in web traffic trends going to the website here, the pace is very similar to Palantir, as you're seeing the web traffic trends at ChatGPT, the web traffic trends you're seeing at Anthropic. And so it looks like those signals there are matching up with what we think will be an AI secular winner, along with some of those others.
We were just showing on the screen the government revenue growth, and Palantir does have a great exposure to government revenue because it's won a lot of that business. But aside from that, from a strategic point of view, what's the biggest risk to Palantir, either a technology-based competitor or a shift in trend that would potentially upend your move here?
Listen, government's a little harder. I'm not a government specialist, right? So that's a little bit of a black box for me, but you can see the awards stacking up that gives us confidence that business can get a lot larger. You have this secular shift from big machines to small machines and AI software. On the enterprise side, what could go wrong? What's driving that business? 30 years, we've seen the pendulum swing away from custom software towards prepackaged SaaS. What needs to happen is you need to see a shift away from prepackaged software to custom. And if that happens, I think that's what's fueling the growth for Palantir. If that pendulum doesn't swing back to custom builds, where a city builds their own custom app on top of Palantir, where a Wendy's builds their own custom app on top of Palantir, if they go back to just buying prepackaged software, that growth profile will be wrong. That's where the risk lies. So that's the secular trend you're betting on here with this one, is more enterprises with their own proprietary data, with this ontology logic layer delivered through Palantir. They can build their own custom app.
All right, Matt Money, sounds like a lot of what you were talking about 3 years ago. What is your take on that, and what is your take on Palantir at 160?
Well, thank you for accepting me in my tardiness. It's always good to be with you guys. And Arnie, good to see you, brother. Dude,
Yeah.
You've been hitting the gym, dude. You're looking fit as hell, looking good, brother. So regardless of what that guy said, I agree with him to a lot of the details that he stated, but I think he's right, but with a very slight nuance, right? I agree with him with respect to the fact that he's talking about customized software, but I think what he's talking about is customized software for the industry. So what I think is going to be seen is that what Palantir has done extensively is they've grown from, say, 20 industries in 2020 to over 50 industries today. and created these underlying opportunities and platforms and applications for each of these industries in which they're in. And so now when they go to a new company in one of these industries, they have these underlying applications that they can either test, try, or have. So it's almost like you have these out-of-box solutions that they can kind of approach you with. Now, those companies could also come with their own customized solutions as well. And I'm sure that some of these companies will come up with their own bottoms up. But I think it's also allowing them to potentially come out of the box even faster and allowing them to say, hey, we've dealt with this before. We know exactly what you might be looking at. And we've understood how the ontology works from, let's say, a warehouse or an oil and gas company or a Boeing of the world from a manufacturing standpoint. Let's help you. That's why Warp Speed has been so successful, is they've utilized that in manufacturing. And now they've said, hey, we're going to utilize this with other manufacturing companies. So it's not entirely custom, if that makes sense. It is, right? And it's building things up from the ground up, but it's more specific around industries versus something like what you have with Microsoft has been, hey, we're gonna give you, these pre-made things, and you're gonna try to put a square peg in a round hole, and it's just not the solution anymore.
Arnie, your thoughts on the 170 price target? Also, what do you think about Piper Sandler saying after our due diligence, it's not a meme, it's a real business?
I find it funny that they needed to specify. And if they needed to specify, it means that for some people, the label is still alive in their head. Personally, I'm more interested to the last part, which is something Matt, I think, brilliantly is explained of. This is software that is tailored more and more towards the industry, much more than tailored, like built from scratch each single time. And make me think of, probably the question is not neither that much of, but is the trend prepackaged software or the trend is a custom made? I think the trend is software that works, software that dominates. That's the key. And what was the issue typically with custom made software is, once you want to have something custom, it means extremely long time to build, extremely vulnerability to break. And since there is something that is too specific for you, you have little reference cases of what's outside. But if you have software that is custom made for your company, your industry, and you can deliver it fast, and you have a lot of iteration cycle where you get feedback from many customers, and you can improve the software for your specific needs, but at the same time improving the strength of the ecosystem, that is where the magic happens. And I think that is more the real trend than software that is prepackaged or customized. Software that works, software that doesn't work. And the more shocks you have in the system, call them tariffs, call them carry trade, call them political uncertainty, whatever, the more this distinction between works, doesn't work becomes more evident. Personally, I was very surprised by seeing again how much the government side has been accelerating, because typically we tend to think more into, the commercial side is what is really pushing the numbers, but now we also have the second motor, the government side, pushing as much, even more in the last quarters. And then again, let's make the example as of before. If we just confine ourselves to an Excel world, we would say, now we get back to normal growth, because you have this spike and then you need to normalize, return to the mean. While if I think of the context that I've been seeing, I can't think of the snowball that Palantir is having on the government to decelerate. Okay, maybe like in percentage wise, it could decelerate a bit due to scale, but I don't see it slowing down. Like, it's like Palantir is now in the perfect position where we hoped it could have reached years ago. Like having influence in the industry, having influence in the government, I would say. Because if Donald Trump explicitly recognized the value that Palantir is having, it means that they're doing something well. Like Donald Trump needed to specify, hey, we buy a lot of stuff from Palantir.
Let me play that video that Arnie's talking about. So this was the moment this week at the DC AI conference.
Sham, Seneca of Palantir. We buy a lot of things from Palantir. Where are you? Are we paying our bills? I think so. We just made a deal with.
And then he said, "Are we paying our bills?" I think so. Right? Pretty cool.
So this made me think of what Chamath said about Buffett. Stop talking about Apple before Buffett actually sold a big chunk of Apple. And this is like reversed. If you publicly recognize, oh, we are buying a lot of things from Palantir, implicitly you're saying we are betting on this company to push us, and we're not. Like, imagine how stupid it would be. Oh, we are buying a lot of stuff from Palantir, and next year, fuck Palantir.
Right. So you're saying the government growth is not slowing down at all. It's probably going to accelerate, if anything.
I would say at least remains sustained.
Right. Matt, what is your opinion on Piper Sandler initiating coverage? Like, do you like that? Do you not like that? How do you think of them putting out that price target?
I mean, I think everybody should be at least looking at Palantir. I think it's a company that, as you said, that's grown influence, has infiltrated a lot of different businesses, is helping a lot of healthcare and hospitals around the nation, is growing international influence as well, and kind of to demonstrate and add on top of what you showed with Trump calling out Schaum in the middle of a speech. I mean, he took Alex Karp just a month and a half ago to the Middle East, right? To meet with a lot of the folks in the UAE and I forget, was it Oman? I forget which country specifically
Qatar,
it was.
Saudi Arabia.
Qatar, Saudi Arabia. Yeah. So I mean, you had all these people being introduced to the Middle Eastern leaders as like, hey, if you guys want to do business with the United States, these are the people you're going to be doing business with. So that's a very elite group. And so if you don't have coverage on Palantir, at least looking into initiating coverage on Palantir is one of the top 20 companies in the world at this point. What are you doing, right? If your company is not at least providing this context to your sell side or your buy side sort of folks, it doesn't. I'm trying to understand, right? Like you have a bunch of clients that are looking to you to give them information, and they're probably sitting there. Why did we miss Palantir, right? Why weren't we in this? Why did other retail investors like the Amit's and Arnie's of the world are able to find this at $6 or $7, and we're just getting initiated at $145, $150, right? Why is that? And so I think that they honestly, if anybody hasn't initiated coverage as of yet, has a lot to explain to the folks that they have on their newsletters or have that they feed their information and stock insights to for not initiating coverage earlier.
Just a bit of context. This speech was done at an event specifically how to push AI in the US to make US great again. So it's not a random event. Here,
I mean, there's Jensen right there.
All the key leaders.
Yeah.
So you had in one place all the most influential people related to the sector, and you have the president acknowledging the value Palantir is providing.
Well, that's also the thing. Palantir's sphere of influence is very important. They don't have thousands and thousands of customers. They have less than 800 customers, but their influence feels like they have 1 million customers, right? So it's like the street's obviously pulling forward a lot of growth. Palantir, we all believe, will be able to put up the growth. We've seen how Karp has literally said, we want to be not $1 trillion, we want to go to $3 trillion, right? Like he's feeling confident that they can get to that growth. And then you look at the actual numbers that not only top line's amazing, but bottom line with the margins are incredible. And they still have less than 1,000 customers. Like, this is a company one day that should have 10, 15, 20,000 customers over the long term. And if we are in that inflection point, even though the street has pulled forward a lot of that growth, maybe that is what allows them to not only grow into that valuation, but really grow into something that we can't fully understand, which is this massive AI sector that's getting a bid from all different perspectives. I mean, you got Anthropic today that's getting a $150 billion valuation. Now, Anthropic's growing like crazy, but Anthropic was a $10 billion company 2 years ago. So if private market companies are getting that type of momentum, I think we will definitely see that with the deep liquidity of the public markets as well.
I do like what you say. Imagine the influence Palantir is getting. And let's put it this way. Palantir has 900 customers and is getting this level of influence. Snowflake has 10,000 customers. Essentially, nobody cares.
No one cares.
This gives you perspective into relatively small number of clients, but the impact, like the respect it is getting, is just out of the charts.
Again, it reminds me of content. It doesn't matter how big your audience is. It matters, do the people that are watching or consuming your content, do they care about you? Because if they care, that is way more important than many, many people that barely care about you as a creator.
And I agree with that statement because it's like you could go and chase 1 million customers, but it might dilute the value of the software, right? You're more so focusing on the getting it to new customers and but you're not focusing on building the applications that they may want from a custom perspective that then you can use across the industry. So you have to play a fine game of, say, who are the customers that can really help us strategically partner with and grow the business and make us a better software company in the long term, rather than just getting a random client just to get revenue through the door. And I think that that's what's always been strategic from a Palantir sort of lens, is they're focusing on great companies that are in great industries and trying to solve the world's biggest problems, not just trying to show up to solve and get revenue. So,
guys, how many analysts are covering Palantir? Do you know it?
I think it's 15, maybe a little less than that.
Matt, what's your number?
I couldn't tell you.
Is 26, which is a big improvement from months ago. But
Yeah,
still,
you're right.
do you know how many snowflakes it has?
32.
40.
50.
Wow.
52.
So imagine, going back to my point earlier, Arnie, and I hope this is where you're going with this, is like, think about all the analysts that started coverage on Snowflake and where that stock is traced since its IPO, and the lack of coverage that Palantir has gotten thus far. And it has grown from a company that wasn't even included in the S&P 500 to now being in the top 20, 25 companies in the world. And you have literally less the amount of analysts covering it than you do for Snowflake.
It is pretty incredible. I want to show you guys a clip, a little bit of a blast from the past. I showed this on my market close today, but I think it'll be nice for everyone to revisit. This is from the Q4 2021 earnings call. This is when Alex Karp was asked about when the company would be profitable. And here's what he said. I know a lot of us, definitely myself, was down pretty heavily on the Palantir position. I was 23 years old at the time, and I was listening to what he said. And I think looking back on it 4 years later at all-time highs, it's pretty incredible to see how this all played out.
And there will be a normalization that will get us into a range where you would see in a software company within the next 18 months, latest 2 years. But there's essentially, and that's going to take a little time. It is going to happen because it's also very much linked to another question, which is how do you actually run the company so it's profitable someday on a GAAP basis, not stripping out comp, and that is also within eyesight. And those are goals for Palantir, because same reason we have no debt, same reason we have $2.3 billion on our balance sheet. This is a company built for bad times. Bad times mean strong finances internally. And that means at some point you have to be GAAP profitable. You can't be GAAP profitable if you're diluting people or correctly your stock-based comp is totally is not in conformity with other companies. So you're seeing a normalization. This will change. It will change in the relatively near future. It'll be linked to other things that we believe are important for Palantir, like having a company that thrives in bad times. And bad times are very good for Palantir because we build products that are robust, that are built for danger. And then the finances internally are actually built for bad times. And bad times means you have free cash flow. The free cash flow turns into GAAP profit. That means the stock-based comp has to be one that's aligned with our investors. Also, because that's basically, it's part of a little bit longer philosophical narrative. But like, if software is the only moat, then value and growth shares have to be evaluated in terms of their value. Value only exists if you can actually get a tech moat, call it. Maybe it's something besides, and growth only exists if you build a company that is where the technology is strong enough, the business fundamentals are strong enough that the free cash flow actually turns into GAAP profitability, and that's linked to stock-based comp. So this is a priority both because you care, but also, quite frankly, because it is the health of our company, which we care a lot about.
Arnie, I don't know when's the last time you saw that clip, but what is your reaction looking at what he said 18 months before they became profitable to now at $160? You're muted.
Seems ages ago. I love how Karp evolved, and I love how he was aware, but didn't rush into making things. And again, to make your content reference continue, it really made me think Karp was like a creator literally trying to build the audience, not by following a recipe. You need to do a video a day, you need to do 3 shorts per week or so on, so that you get the output. He was keep asking himself, okay, how can we make the software that makes the life of our clients best? How we can structure internally so that when something bad happens, we are agile to absorb and react to that shock. And if these conditions are true, and we are able to increase the scale of this system, GAAP profitability becomes the inevitable consequence of this, not the primary target you seek. Because if a company targets max profits, you can just cut cost and reduce the level of value that you bring to the customers. But if you're maniacally focused on the clients, then the profit is just the manifestation of that value that is scaled towards clients. So I loved the psychology / the philosophy in it. That I remember the first time I heard the video was like, what? What? But it's so nice to see in hindsight how everything that was in Karp's mind actually makes sense. Makes me even more confident on the fact that when Karp speaks, do listen carefully.
Matt, any reaction from watching that 4 years later?
Yeah, I remember people giving a lot of crap of Palantir at that time. Looking back, a lot of people were like, "Oh, it's a share-based compensation machine. All they're good doing is giving out share-based compensation." And if you look at the net income back then, they were losing about $100 to $150 million a quarter. If you remove the share-based compensation, they were pretty much breaking even as a company.
Yeah.
And so what I think Karp had seen at that point was, hey, if you just remove this from a net income basis, we're actually creating, breaking even as a company, and our revenue will be growing, pretty well. And I think into 2021, 2022, at least they were still growing at a 20 to 30% clip at that point. And so they knew that at that point they were going to be getting into a place where they're going to start being able to grow the balance sheet. They basically went from about $1 billion and a half pre-direct listing. Once they listed, that's where they were able to get the 2.3 billion that he was referring to in the video. And at that point, being cash flow kind of neutral to the point where, hey, we see ourselves in the future actually starting to generate cash to the bottom line. And it's only been evident since then, where they've been able to not only double the amount of cash on hand, but go from 2.4 billion to just last quarter 5.4 billion. And that gives me like the mindset of like the possibilities of where this company can pivot to and go next is literally endless. The company has no debt. They're continuing to generate ops cash over $1 billion. The valuation, yes, you can get yourself, until you're blue in the face, whether it's overvalued, undervalued, it can be a $3 trillion company, etc. But what you can't argue is that this company has the flexibility for the hard times, just like Karp mentioned in that video. They're producing over $1 billion in ops cash as of last year in 2024, and they're going to continue to grow that to probably over 1.6 billion in 2025. So it'll just be really fun to watch and see how their cash flow margin continues to grow, and excited to see when they get to a $5 billion run rate in revenue. It should be in short order. Annually, not quarterly.
I agree. It can be very, very exciting. AJ, thank you for the $10 super chat. Really appreciate it. And Rob, thank you for the $10 super chat. We're going to end out the show on this question. We will do an actual earnings preview next week and go deeper into the charts. Earnings is August 4th. So all of us, if we're available, I will definitely be live. Hopefully everyone else will be here with me on August 4th, 3:30 p.m. Eastern for earnings. If you guys have one, Arnie, we'll start with you. Do you have a price target or a way you're thinking of the price going into Q2 earnings?
I start from the premise that I don't like to think in terms of targets. So if you remember, I never tried, Palantir is worth this much or this much. That's a conversation that paradoxically, even if that was my job as an analyst, it's exactly because I'm aware of the limitation that it brings, that I try not to think too much into targets, because I think targets gives you mental rigidity. But if you can ask me, okay, what do you personally expect? Like, what's my guess? And that is nothing more than a guess. I personally think in the 170s, aligned with Piper Sandler, because I ask myself, okay, everybody knows that Palantir is the AI software company. Right now, personally, I don't see reasons to be scared of the price action other than is expensive. But as we were saying, the wind is so strong that I personally expect there would be some speculation of people just buying up calls before the earnings. Also because in their relatively recent history, Palantir has surprised during the earnings. Also the last time, if I remember correctly, that we crossed the 100, right? So in people's mind, Palantir is a stock that can surprise and can surprise big. Therefore, you can play with options if you are a trader. And I think many traders will buy calls. And if many people buy calls, then the price is has a push towards the positive side. But again, this is just pure speculation. Don't assume this to be true.
Matt, your thoughts? Any predictions going into earnings?
I mean, I've always been awful, obviously, over the past 18 months, giving a price target on Palantir. I would just assume that it stays flat or goes up from here, just based off of what has been happening. I think that institutions aren't done buying it. Maybe you see a slight dip, but I think that even still, I think institutions are far from done buying it at the moment. The thing that I think will give it a lot of boost is, and we talked a little bit about this earlier when I had the opportunity to jump on the market close, was even just staying flat from the 883 revenue that they had last quarter to this quarter over quarter being 0% growth, year over year from the second quarter where they generated 678 million last year, just going to the 883, that's a 30% growth without even growing revenue quarter over quarter. So what they guided for, I think, was 38%. And that's, as already alluded to, they've generally been guiding slightly conservative over the past few quarters. So likely that they'll end up in the 940s, 950s, potentially even, and that would give them a 40% clip. I don't know. I generally don't like to give price targets. I always look I try to look down 10 years, 20 years down the road, and I still think this is a trillion and a half dollar company. But I don't know. And I'm curious to see what could potentially be the catalyst that could potentially break the camel's back at this point, because the valuation is stretched in my opinion. But overall, it doesn't mean I'm going to sell. I think the company's great and are doing all the right things. It's just that the valuation maybe has gotten a little bit stretched. Not maybe, but has gotten a little bit stretched. It's probably 5, 6, 7 years ahead of where it should be at the moment.
The valuation is stretched. Does that mean, and you're not selling, does it mean you're considering making covered calls?
I do have some, unfortunately, in like the 140 range. I have some in like the 130 range that are currently underwater. So that's just to be completely honest and blunt. There's that aspect of things. So hopefully we'll be able to get out of those over the long term. But I generally try to write covered calls on a lot of my positions very far out of the money. And as we know, Palantir has just been one of those companies that has just completely rocketed and continues to just, no matter how far out of the money you think it is, right? The pendulum has swung so far that you can't quantify. And the problem is with covered calls as well, for anybody that's listening, is covered calls, especially if you look at like the deltas and the probabilistic ranges of what you think is actually going to show up, it's based off of historical movements. And so if you're writing on something that isn't moving very far, and next thing you know, it starts to move very aggressively, you're going to write something that is based off of movements that weren't very aggressive, and now it's moving extremely aggressively. Unfortunately, you're kind of getting yourself into a pickle at that respect. So just some food for thought, because a lot of times what that implied volatility is looking at is the previous 30 days, 60 days, 90 days, etc.
Yeah, and I think people who have covered calls going into earnings, maybe at like 155, 160, 170, if you feel Palantir is going to have a blowout quarter and they're just going to blow past those prices, you can roll it before earnings. You don't have to take the risk until after earnings and when it gets to that price. And you can go far out. You can go to June 2027 and pick $230. Right. And so you're qualifying from your 150 strike to a 230 strike based on when you sold the cover call. You might have to pay a little bit for that. But if you're going that far out, you are probably going to collect a decent chunk of premium because you have so much extrinsic value on the contract, which is your time value. And then you have to ask yourself, okay, by June 2027, is Palantir more than 230? Now, someone might say yes, someone might say no. I think we can all agree the valuation is definitely aggressive at this level. So does it keep getting more aggressive, or does Palantir keep growing so much that it looks cheap at 230? You don't know. But the point is, if you are in those covered calls, you can, get yourself to a better position. And then you could potentially roll it again when it gets time to get to that strike at 230, whatever it is.
And to give people some help, I mean, we all know that the price of the company, the stock price rather, is just a derivative of basically the amount of shares outstanding. So to help people out here, if you're trying to understand what kind of market cap that would be, etc., if you're looking at a $200 share price, you're looking at basically a $500 billion market cap. Because there's about 2.6 billion shares outstanding for Palantir. So think about it in that respect, right? So then if you were to get to $300 a share, that's 750 billion. $400 a share is about a trillion at that point. So just kind of keep those round numbers in mind and what they kind of relate to. Arnie, is my mouth wrong? Probably. I'm not very good at math.
No, you're relatively correct. My thoughts on just the earnings is I have no idea, dude. I have no idea. Last earnings, we took a dip. I think we went from like 120 to 108, and then that ended up recouping. I think they need to put up 40% growth. I think they will. If they don't, do we see a dip? I mean, maybe. If they put up 50% growth, do we see that expansion to 170, 180? I mean, even with the valuation being what it is, I think the market gets excited. Could we be flat? I think there's a world where we could be flat. Where, last quarter we were down like 8%. That's not necessarily flat, but if we're down 2 to 3% or up 2 to 3%, I don't think that's crazy either. It's a question of how much of a grand slam they put up to get us to go even further, or how much of a grand slam it is, but just not really hitting it out of the park to such an extent that the market thinks, okay, we have to keep it at these levels, and then maybe it dips. And I think they're in a weird situation right now where they're not putting up NVIDIA quarters yet. NVIDIA had that string of Q2 2023 to basically Q3 2024, where it was like triple-digit growth every single quarter. And they were beating by like almost 10, 15% every quarter and raising 10, 15% more the next quarter. Palantir's not there yet. And I don't know if they're going to get there this year or next year, but if this is the quarter, then we're going to the moon. And maybe we're already on the moon and we're going to Mars. But if that's not the quarter yet, which realistically it's probably not yet, then I don't know if the market's going to continue giving it this premium or if it takes it to the downside.
I'm aligned with Peter saying Yoda once said Palantir either goes up or down. There is no flat.
One of the things I have observed though as well is like the cash inflow from the company can sometimes be cyclical depending on the quarter. And so the past 2 quarters have actually had really good cash inflow and the margins have actually been pretty good. And we haven't really seen a down quarter in about 5 or 6 quarters. So I'm curious if that's just if the cyclicality, because the company has gotten large enough that cyclicality has kind of been smoothed out, if that makes sense, or if we still anticipate some of these larger contracts to embed some of that cyclicality. I don't know the answer to that. But I'm curious if it will end up potentially playing a role. But all the trends at the moment, if you look at them, the net dollar retention, the revenue growth, they're all going in the right direction. And so, coming from a flat revenue base, even quarter over quarter at 0%, you're still looking at 30% growth. So net dollar retention is now climbing like it hasn't been since 2021, 2022. So it'll be interesting. It took that big dip, as we know, until like the late 2022, early 2023 time plan. So
I think one thing that is important, let's say Palantir puts up a monster quarter, like just across the board, all of us as retail analysts are like, wow, this was an incredible quarter, and the stock dips. One thing that really weirded me out was when they fell from 140 to 129 and people thought the world was ending when they got out of the Russell, did some rebalance or whatever.
Remember that?
I think everyone needs to take a look in the mirror and say, if this stock goes from 160 to 140 or even back to 120 for whatever reason, which I don't think it will, but let's say it happens, even though unless they, if Palantir has a crappy quarter, then you have the right to be upset. If Palantir puts up an amazing quarter, Palantir is not responsible for this valuation. They can't change the value. They can only execute as a company, and then the market determines what is it worth as a public company. If the market says, hey, it was a great quarter, but it just wasn't enough to keep this valuation, I think the retail investor base has to understand we are trading at the most aggressive multiples that I have ever seen a public company trade at. And I think the same for you both. And so pullbacks, consolidations are very healthy. The beautiful thing about having a high margin of safety, if you have like a 10, 15, 20, even $30 average, is that you don't really have to feel that much of the pain if it falls back. But for those that are buying at these levels, you have to buy knowing that you're buying a company that is one of the most expensive companies in the world. And that's not Palantir's fault. That's just their execution. The market decides to give it what the valuation wants to give it. The market giveth, the market taketh away. Maybe the market takes it higher on earnings. But I think we all have to acknowledge that Palantir has just done an incredible job over the past couple of years. And regardless of what happens to the stock, if the company performs, that's all we can judge at the end of the day.
Can I make an interesting point, though? So we have some people out in the audience that are probably sitting on these extremely low cost bases, right? And I'm not saying to do this, right? Everybody has their own situations. Everyone needs to evaluate their own situations. But somebody was even giving me crap because they asked me something very comparable when it came to Rocket Lab. And I think this is something that's very pertinent that people should potentially listen to when it comes to Palantir. Say you have the lucky opportunity to have bought 10,000 shares at $10 share price, right?
Yeah.
$100,000 in cost basis, right? You were fortunate. And that has obviously grown to be a massive sum of wealth. Forget about what the price is now and what the valuation is now. But what if you could think about it, it's like, well, should I still be adding shares, right? And a lot of people will be like, oh my God, I mean, why would I destroy my $10 cost basis, with these shares being at $150, $160 a share? Well, if you think about it, okay, say you do end up adding, a 10% additional position, adding another 1,000 shares, it's going to cost you $150,000, let's say roughly $160,000. So now your cost basis is $260,000 for 11,000 shares. Still $22 cost basis.
Yeah.
You'd be buying shares at $22.
Yeah.
So if you think about it in that respect, it's like, I'm not saying that, it's stupid, but if you think about it from where your cost basis is, it's another way to look at it. Maybe it's not the right way to look at it, but you really have to think about what your long-term time horizon is for this company. Are you going to stick in it for 10, 20 years? And I think a lot of people aren't necessarily thinking that this company will eventually be getting to a place where they offset all their share dilution. They'll get to a place where they have a 1% to 2% dividend per annum. And I mean, I'm not talking about tomorrow. I'm not talking about next year. I'm not talking about 5 years now even, but I'm talking about 10 to 15 years down the road. This company is going to be generating so much cash that if you think about what your potential dividends might look like at that point, where you're getting a 1% to 2% dividend on, say, $1 million, that's life-changing money at that point. Why would you potentially, on an annual basis, like, why would you sell if you still are waiting for it to potentially get to that $1 trillion market cap valuation? It doesn't make sense. So unless by chance this is the only money you have in the world and you don't want to risk it, right? Which I would potentially get. So,
Arnie, any thoughts on that at all? I mean,
one
Arnie,
thing,
you're heavy in Palantir with like $7-8 average, right? And you've sold some here and there, but like, are you thinking of selling at these levels at all, or hedging a little bit, or selling?
No. The way I do, not necessarily that's the right way, but I'm seeing that is the right way for me personally, given my financial position, my income stream, that is almost none. The way I like to do it is I like to have some cash aside. So rather than starting from a position, I start from the cash. So what is the cash that allows me to say I'm confident in having bold positions, but at the same time, I don't feel any financial risk. So I can live very normally. So I tried to engineer the way where I can be confident, not touching the shares, but at the same time, confident in expressing my view.
Yeah.
So since especially now these shares have an insane gain in relatively little time, I know that if I just touch them, tax-wise, it really doesn't make sense. And I don't want the Italian government to get a fourth of my position just because it's cool. So I'd rather not touch it.
And I have heard some people being like, oh, well, let me sell so when it dips, I can buy back. And I get that, right? But Arnie put a very good point there. Let's just say you do have to give 25% to the tax man. Let's just make it simple and just say the majority of the value of the stock position is actually gains, right? So to remove cost basis. In that respect, if you think about it, in order for you to break even, you not only have to have the stock, the stock will have to dip much more than 25% for you to get in to a cost basis that even makes sense for you.
Yeah.
Because at that perspective, you're now, let's say you have $1 million position, you sell it, you now have to give $250,000 to the government for you to get a meaningful position to even offset that $250,000. I'm not saying don't sell, right? I'm not saying, but I think there's a fallacy that I think people lie to themselves about, oh, I can always get in at a lower price. And that's not always the case. And if you do want to get in at a lower price, you're going to have to offset the fact that you do have to give away 25% to taxes and then get in at a lower enough price. So it's like, if you're only waiting till it's down 10, 15%, you're actually shooting yourself in the foot. and actually making a mistake by doing that. Now, what I do want to state is I think that everyone should evaluate their own positions and say, is taking profit. I've actually applauded a lot of people in the Rocket Lab Palantir community for taking profit. Everyone has their own situations. And so, I hope that nobody in the community is bullying anybody to say diamond hands this, diamond hands that. Everyone has their own situations. I've seen people pay off weddings. I've seen people pay off cars. I've actually have somebody that I know personally that's able to retire early based off of some of the things that we've been able to demonstrate on our channels. So in that respect, man, I mean, you got to take profit sometimes, and not everybody is lucky and has the opportunity to be in a situation financially in their 30s or late 20s like us, right? I've been in a situation where I can take that risk, where I'm like, you know what, if this position actually goes to zero, F it, I'll still be okay. I'm still 30 something. I can still work for the next 20 years or whatever I need to do. But for me, these opportunities for me are what potentially could put me in a situation where I can have okay money and be the cool millionaire next door, or I can be in a place where I'm,
It's FU money.
Kind of. I mean, I don't want to state that, but it's just like, you think about it, it's like if you actually play these things right, it gets you into a different magnitude of wealth.
Yeah, and I agree with your argument about cost basis and shares as well. I mean, I bought shares at 134 when it fell from 147 to 129 on that Russell rebalance thing, because I'm like, all right, cost basis is 25. I'm like, I feel like having some more exposure. Like, I think things are working. But I also am not ignorant to the fact that if Palantir goes back to 130, I'm not going to be upset that I bought shares at 134. A, because I bought shares a long time ago as well, but B, because that's not Palantir's fault. Palantir, as long as they are executing, it is not their fault that the market cap goes from 370 billion to 320 billion. That is just, hey, I should know. I should have enough understanding and competence to say this is an expensive company. I'm increasing my cost basis because I want more exposure, because it's not going back to 25 again. And if the stock falls for whatever reason, as long as the company is executing, that is something that I cannot be upset about. And I think a lot of people have to have that in their mind as well, because if I think Palantir is going to be $500 one day, if I think that they're going to $1 trillion, then buying at 132 to me is not a horrible deal. And I'm not going to be greedy enough to say they're going to get back down to the 70s and 60s like some people say, because I don't see that happening. And sometimes you got to pull the trigger. But if you're just entering at 150, 140, 155, then you have to be ready for whatever happens after earnings.
Okay, if you really want to preserve a cost average on one side and you want to add, just open another broker so that you don't see the other cost basis. Problem solved.
Right. All right, folks, that's it for us. Thank you, everybody, for being here. We will be back next week on Palantir Weekly for the earnings preview. We've got Q2 coming up on Monday, August 4th, and it'll be another quarter to see how this all plays out. Amir, I think, fell asleep, unfortunately. He's going to wake up and be so mad. He really wanted to come on the show today. So he'll be back next week, and we'll do more.
Feel free to bash Amir for sleeping.
Yeah, feel free to bash Amir for falling asleep on this one, but he probably was also super tired. I'm tired as well. And so we're going to end it out here. The one thing I will say is, though, we're going to need to find a different date for Palantir Weekly, because Friday nights are obviously not working anymore. So
who are you taking out? Just kidding.
No, we're not. I just think all of us are getting so busy at this point in life, and I want to keep the podcast going forever, or at least as long as we can. So we'll try to find another date that it works for everybody, that keeps it going, but is not, at the most inconvenient time for everybody.
I personally, we don't have to discuss it now, but I'm okay with it being fluid. So
yeah, we'll figure it out, because Arnie's over here traveling the freaking world. He was just in the Netherlands 2 weeks ago, and now he's in, he's just going everywhere. He's really living the Palantir.
Congratulations, brother. Well earned. Well earned.
I can say I'm recovering the time I didn't exploit it.
Yeah, he was in Southeast Asia a couple months ago, traveling Europe. I mean, and a lot of it is because of his deep due diligence when this thing was 6. I mean, it just absolutely has changed so many lives. And I think we're also grateful for the journey, for the community. And genuinely, it feels so exciting, because we think they can keep executing and take this to a different stratosphere. And it's just a question of how Palantir executes at the end of the day. All right, folks. That's it. Arnie and Matt's YouTube and Twitter in the description. We'll see you guys
Thanks for having me
next
on.
week on Palantir
Until
Radio.
next time.
Bye, everybody. Have a good one.
Yeah.